In the meantime, we are going to jump in and get started. So I'm pulling up the presentation here and oh, should have closed more tabs, people. Should have closed the tabs. Here we go. All right. Thank you for being here for the Exit School webinar. I am Amy Walker, and I am so excited to be able to share with you the things that I have learned since selling my business for 7 figures. It has been definitely a learning curve, and I want to be really transparent in sharing what that process was like. What were the bumps? What were the bruises along the way? I've been on both sides of this coin now, both in the buying businesses side and in the selling your business side. So I really get it from both angles. And I want to really make sure that business owners are prepared to have a good exit. So that's what our goal is for today. And I invite you guys to leave comments. I invite you to ask questions and tell me a little bit about what you've got going on with your business and what you're actually looking for some support in. And I love this. So George, HVAC, that's actually a category that we're looking to buy in. So maybe we can chat about that offline afterwards. No idea what any of you are currently looking for in an exit. I find that if you're anything like I was, that most small business owners just really don't know what the process looks like. They don't know what their options are. They don't really know how their business is valuated. So let me share with you a little bit about what we're going to cover today. We're going to talk about the 4 different exits, because sometimes when people think of exiting, they think it has to mean that you're selling to an outside company, and it's not. There's a lot of different options for what your exit can look like, and so we'll chat through what those are. We're going to talk about the critical mass formula for being able to enhance your value and accelerate how much you can get out of your business. We're going to talk about growth through acquisition. We're going to talk about processes for freedom for you as the business owner. We're also going to discuss sales and marketing strategies so that you really are getting as much out of your business as you can. I would love to start off by sharing with you a little bit about my story, my experience. I started my business like so many other small and mid-sized business owners because I wanted a job that gave me control and gave me freedom, and I wanted a lifestyle business. And I wanted to be able to provide for my family and go on vacations and give my kids opportunities that maybe I didn't have when I was growing up. I don't know if any of you can relate to that, but if you can, go ahead and type in me. Because that was really my whole intention behind starting, was I wanted to do something I loved, have a little bit more control. My husband and I have 5 sons together. At the time, they ranged from newborn, like I literally started my business 6 weeks before our last son was born, up to 5th grade. Now they range from 11 to 21. And we've been able to run our business the whole time while taking care of our family and putting our family first. And that was a top priority for us. In 2018, I had a really big wake-up call. We had been running our business in a very kind of tight-knit way. My husband worked in the company with me. My sister worked with us. We had a couple of independent contractors, and we ran a pretty tight ship. We were doing about 600,000 a year in sales, and we were profiting, like what my husband and I, our take home was somewhere around 220 on an average year. On a low year, we would earn like 180. On a good year, I think the most we earned was like 240. And so we had this lifestyle business that provided us with a good income. And I thought we had arrived. Like this was all of my goals come to fruition. I was pretty stoked about it. And then 2018 happened, and life threw us some curveballs. During that time, I became a co-caregiver of my grandma with my sister. And I didn't know adult protective services was a thing until I got a call from them. And they basically said, your grandmother's no longer safe to be living on her own. And it was one of those things, we just always assumed her kids would take over that role. And when that didn't happen, my sister and I jumped in. So all of a sudden, I have massive family responsibilities that were very time consuming and very stressful. Also, I had some children who were going through some challenging teenage times, and I really felt strongly that I needed to take a pause from business and really focus on my family. And I thought we were going to be okay. So, can anyone tell where this story is going? If you guys know what that feels like to think that your business is going to be okay and then realize it's not, it was very painful. So, I watched over the course of it was about a year and a half that I kind of took a step back. I watched our sales drop from about 600,000 to about 100,000. And while, new business owner Amy would have been like, oh, I just want a six-figure business. That's great. Business owner Amy, who had expenses of a $600,000 sales operation and was used to a certain income, and now the total sales were less than what I was used to as my income. It was a really painful experience. And while I do not regret at all that time, because number one, I had some really special moments with my grandma before she passed. Number two, my kids have survived into adulthood and they're doing great. And number three, I learned some really, really critical lessons, which was that I had built a lifestyle business, not a value-based business. So everything that we were doing had to funnel through me. And as a result, we were not sellable in any way, shape, or form. And the business could not run without me in any way, shape, or form. I'd love to hear from those of you who are watching. Could your business survive without you? What's your best guess? If it's no, type in a number one in the chat. If it's maybe, type in a number two. And if it's yes, it absolutely could, type in a number three. Let's see kind of where you're at. So mine could not survive without me. I learned. I didn't think that was the case, though. I was actually kind of surprised by it. I thought that it would be okay, and it clearly wasn't. So when I came back in just right, it was actually early 2020 when I was like, okay, I'm ready to plug back in. So the rest of the world was like tanking, and I was like relentlessly building systems and processes and looking at every area of my business and being like, what would it take for this to run without me? What would it take for this to run without me? And over the course of the next couple of years, not only did we build a stronger business that was doing better than it had ever done before, but we also attracted a buyer. And I want to be really transparent with this because my buyer came about in a way that is kind of a unicorn story. And if you expect this, I think you're going to be disappointed. So the way that my buyer came about was actually through a job offer. I had a longtime friend reach out to me and say, I want to start building business, or I want to start buying businesses, building businesses, and selling to private equity. And he shared with me his whole vision. And he said, the first thing I want to do is like build a business services branch so that as we acquire these companies, we know we can take care of them. And he said, and I don't know anyone who does these pieces of the puzzle better than you. What would it take for you to do it with me? So I pitched him on buying my business. Now, at the time, I had the wake-up call that so many small business owners have, which was that my business was actually not sellable and it wasn't worth anything. That sucks, right? Like any of you, can you just imagine that knife to the heart feeling? And I'm going to show you why. But at the time, my business truly, it was not transferable. And we'll go through what that looks like to be transferable. It just wasn't. And so at the time, it was like, well, there's not really anything for me to buy other than I just want to hire you. So I spent 9 months changing my business model, doing all of these de-risking behaviors, like massively growing reoccurring monthly revenue so that I could have a 7-figure exit. And in that deal, I also had to do some owner financing to get owner financing is where you don't get paid all up front, you get paid out over time. So I had to structure the deal in a way that it was favorable for both my buyer and for me. And it took some finagling to get that 7-figure exit. So when you hear people talk about their exit and you hear them say things like, yeah, we just sold for 4 million, we just sold for 5 million, it doesn't mean that they get all of that right up front. Now, it depends on how the financing of the deal is structured. But I do want you guys to understand this process because if I had known this and if I had made like a 3-year transition, I could probably have gotten 3 to 5 times more out of my business. And I just went into this really like uneducated. And I never want that to happen again to anybody. I am still super grateful for how my exit went. And I am excited to be reinvesting what I did pull out of the company into other companies that I'm purchasing. So I'm very satisfied where everything ended, but I also will never be as uneducated again in another transaction. So with that being said, I would love to hear from you in the chat. What are your questions that you have as you've heard kind of my story and my experience, and you're thinking about, well, what would my potential exit look like someday? What questions do you have? Go ahead and type those into the chat, and I will make sure that I get those answered. Okay, so first thing, I always like to give the bad news first and then make it get better afterwards. Do any of you guys do that? So let's talk about why your business might be actually worthless, and why mine was in the beginning, why it was not a purchasable asset. So in your business, there's a couple of things that you need to understand. The first is that we have what's called EBITDA, readjusted EBITDA. This is the metric that is used to value your company. It's not sales. So often we think, oh, I'm selling, this is what I thought. I was like, well, we're selling, X amount in sales. We're worth probably 2 to 3 times that. No, it's not based off of sales. It's based off of EBITDA. So EBITDA is your earnings before interest, tax, depreciation, and amortization. That's your EBITDA. So it's basically like your net profits plus you add back in a few things. That's your EBITDA. Your readjusted EBITDA is that you also go into your business and you look for the things that are really personal expenses getting wrapped into the business. Things like, if you have a travel budget that's really more personal travel, but you find ways to make it look like it's business travel, or if you have your personal car, but it's a company car, your cell phones, if you've got any family members on the payroll who are not actually working, but they're still on the payroll for the company, those kinds of things that business owners do to kind of like intermingle personal and business, you would put those things back in because the new owner isn't going to be spending those things. And so that becomes your readjusted EBITDA. Now, your industry has what's called multipliers. And this is dependent on the industry. It's going to be anywhere between 0.5% on the low end to 3% on the low end. And then on the high end, it gets up from anywhere, I would say like 6 to 12%. I did see an industry recently they can get up to 40%, which is crazy. Insurance, in case you were wondering. So we would look at it and we would say, okay, so my industry multiplier is 3. So if I'm doing 500,000 in EBITDA and my industry multiplier is 3, that means my business is worth 1.5 million, and that's what I can sell for. But that is actually not accurate. We have to take into account 2 really important things, which are the intangibles of your business. So these are, how attractive is your business to potential buyers? And then the other thing is, how ready is your business to transfer to a new buyer? So if your business today is completely dependent on you and it could not run without you, your readiness score will be very, very low. And I'm going to go through some of the risks that make your business look like red flags to buyers. But if your business doesn't look attractive and if it's not ready, then you're going to score on the bell curve in this lower area right here. These are the average businesses. These are the best in class businesses. Like 6 would be a best in class. So here's the part that people do not understand is that if you're low on your readiness and attractiveness, your multiplier is 0. Your business is not transferable and it's not ready to be sold. Nobody is going to buy that business. I had someone just recently pitch their business to me to see if I was interested in buying it. It was a business that was, it wasn't a bad little business. And that's the thing is there's a lot of good businesses out there that are not transferable currently. But it was I think they did carpet cleaning and they were earning like 120 to 150,000 a year, with the wife doing all the back end of business and the husband doing all of the servicing of the business. So really that's a job, right? Like that's a job. I'm not going to buy that because I'd have to be working in it full time. And for 2 people to be running that business together, even though, 150,000 might be enough income for their family, it was 2 people working. So it's really not 150,000 income for one person. And that doesn't include marketing. It doesn't include all of the operations expenses. So that's it's kind of an unsellable business as it currently stands. Now, what I will tell you is that you absolutely have the ability to make changes in getting your business to move up this bell curve so that you can get a higher and higher multiplier. Does this make sense? If you guys are with me on this, I want you to just type in yes into the chat. And if you have questions, I want you to type those in as well. So let's make sure we're all on the same page here. So go ahead and type in yes. Okay, makes sense to Larry. Good. Glad for that. Anyone else? Are you with me? Yes. Are you with me? No. Attractiveness and readiness. Absolutely, Adam. That's exactly what it means. So is it attractive to a potential buyer? Is it ready to transfer? Okay. Daniel, great to see you on. Thanks for being here. So with this, there are more business owners than we want to admit that are in this lower range. Best in class, BIC means best in class, Adam. That's a great question. So this means that out of all of the people in your industry, you are going to score really high on the attractiveness and readiness score, and you're considered a best in class business. Great question. Okay, so let's talk about the different exits that we make. So the first one, if you're a business owner, you've already made it, which is you've exited from corporate America and now you've entered into entrepreneurship and business ownership. The next one is when you go from being the chief everything officer in your business to actually functioning like a business owner, like a CEO, a true CEO, not a chief everything officer. The next exit beyond that is when you exit into being more of a shareholder business owner, which means that your business can actually function without you. And you don't have to be all up in the day-to-day doing all of the things all of the time. And then the last is really your ultimate exit, which is when you transition out of the business. Now, how we sell the business, again, there's a lot of different options. You could transfer to a family member. You can actually gift to a family member if you want to. You can sell to internal teams, like your leadership team. You can sell it to them. You can sell to private equity. You can cash out parts of the business over different periods of time. But the thing that I really want everyone to understand is that as a small business owner, 80% of your wealth is actually tied up in your business. So if you look at the financial profile of an employee versus a business owner, the employee tends to have things like 401k, stocks, mutual funds, some real estate. They've got their money in different places. When you look at the average profile of a small business owner, where is most of our money? It's in our business. Why is it in our business? Because I remember having this exact conversation with my financial advisor like 2 years ago. He was like, I want you to spend this much per month in diversification. And I was like, if I spend that much per month on marketing, look at what I'm going to be able to produce. And you can't produce that for me. And I know that when it comes to small business owners, our time, energy, and effort, it produces the highest return on investment when we put it into our business. How many of you would agree with that? If you agree with that, just type in 1. We tend to outperform the stock market. The problem is, and this is where he got me to actually change my approach. The problem is that over time, I'm going to be able to take that money out of my investment portfolio. Whereas with my business, I may or may not be able to transfer that. So we have right now, we have in the baby boomer, have you guys heard about the baby boomer wealth holdings? It's something like $25 billion worth of baby boomer wealth is tied up in small businesses. Why this is so crazy is because 80% of businesses listed for sale never transfer. They don't sell, they don't find a buyer, like they just close their doors. So if we have $25 billion in the economy right now tied up into baby boomer businesses, and those businesses don't transfer, that wealth just gets lost. and they can't extract that money out. I've been building this asset for the last my company that I've just sold. I've been building that asset for the last 11 years. 11 years. I want to be able to withdraw money out of that, and I would hope that you do as well. And one of the biggest things that we can control, because there's pieces of this puzzle we can't control, and there's things that we can. What we can control is our attractiveness and our readiness. And those two things are the distinguishing factor between a business that can sell and a business that cannot sell. Are you guys with me on this? If you're with me, just type in yes. And again, if you have any questions, let me know about that as well. Okay, Lana, so good to see you on. All right. So let's talk about how much your business is worth. What I would like for you to do is just do a little bit of a calculation. And I know that this is rough. It's really rough. It's really raw data. Okay, but your earnings before interest, tax, depreciation, and amortization, even for this exercise, if you just wanted to think of what did you actually pay yourself last year in bonuses, in owner dividends, in salary, what did you actually pay yourself last year? And then add back in anything that you claimed as business expense that was really personal expense, and just come up with a very, very rough number, okay? A very rough number. And then we're gonna use some very simple math. I don't want you guys to think this is my math and these are my numbers, because we obviously need to go deeper on this. But what I do want you to see is the gap. I want you to see the gap here in terms of what's possible. Okay, so look at your number, and when you've got that number, it's again, rough. I want you to just type in, I've got it, so that I know you guys are with me. So rough number, what you paid yourself last year total, plus anything that you wrote off that really was more of a personal expense. And let's come up with a rough idea. Okay, Adam's got it. Great. Let's give everyone else just a minute to get it. Okay, Larry's got it. I love it. Good stuff. And again, when we really go through this and we figure out, your particular bell curve, we're going to do specific things like look at your industry's multipliers and get the range from low to high. We're going to look at the way that they determine best in class is you actually look at the industry and you see what like percentage of sales to EBITDA. And so there's a range. But I just want you to do 3 really simple numbers. Take that number that you've got, times it by 0. That math is easy, right? So timesing it by 0, if your business is not attractive and it is not ready, that is what you're currently worth, okay? Now we're going to times it by 2. And we're going to look at that because my guess is most of you, if you've got basic attractiveness, basic readiness, you're probably going to be at a 2x multiplier. So you could, and everybody could get their business there within the next 9 to 18 months. Okay. So times that by 2. If you wanted to sell quick and you just wanted to get your ducks in a row, that's probably what you could sell your business for within a reasonable amount of time. Okay. Now I want you to times that number by 8. If you were to times it by 8, that could be, and again, it depends on your industry, but that could be what you could actually sell your business for. Do you guys have your numbers? Yes. Okay. This is why I am so passionate about small business owners understanding what they need to do to make sure that their business is actually building value, not just building sales. Because for years and years and years, I thought we just need to sell more. We just need to sell more. We just need to sell more, spend less, increase profits. And I thought profits was the key to having a great business. Profits is part of it, right? And that is attractive. If you have a profitable business, That's definitely attractive. But if you've got a lot of other risks involved with your business and a lot of other things that make business owners look at it and go, ooh, red flags, it still might not be worth the value that you think it should be worth. Is anyone a little bummed out about their numbers right now? Just go ahead and be honest. If you're looking at it and you're like, yeah, actually, Amy, I wish I had stayed off of this webinar and continued to live in my dream world. I totally understand, Lana. I totally get it. I will tell you, however, that for me, this has been okay. Larry's like, no, this is super exciting. I love it. For me, it was the process of realizing the potential and understanding how to unlock the value. Because for me, it's like I have this vault, right? I've got this vault, and this vault holds all of this value. But if I don't have a process to unlock it, if I don't know the combination, then the money stays in the vault and I don't have a way to access it. I want you all to be able to access that money. So today, I'm just kind of giving you a little bit of a picture of what your business could be worth. But let's go into a little bit more how we actually unlock some of that value. So if you want to sell for more, we're going to focus on critical mass. So what this is first thing, we're going to mitigate risk. Surprisingly to me, I would have thought growing sales and marketing would be the way that you increase the value the most. I thought that was it. It's actually not. Mitigating risk is the way you can increase the value the most. Because again, you could have the same exact sales and you could sell for 3 to 8 times, right? So it's not actually about the number of sales. It's about how attractive and ready your business is. So that's the very first thing, is mitigating risk. Then, if any of you looked at your final number, which again, I know we haven't gone into specific industries and their multipliers. If you want to know more about this, we definitely have to go deeper there. But if you want to sell for more than what your top line number is, then we have to look at growth through acquisition. And I've definitely seen this with business owners. They look at their number and they're like, oh, okay, I can only sell for this much. I really wanted to sell. I just had this conversation with a business owner. He wants to sell for 55 million. And currently, according to his EBITDA, he can sell for about 3 million. I was like, all right, let's do it. I'm game. You're going to have to grow through acquisition though. Like that's the path. That's the clear path. And he fortunately is super on board with that and loves that idea. So we'll talk about that a little bit more. Okay, the next one is your systems and processes, because we need a business that is owner independent. I want you to just type in the chat right now, why do you feel like that is important, that the business be owner independent? Go ahead and type in, why do you think it's so critical that the business be owner independent? Let's get some ideas in here, get some thoughts going. More time at Lake Powell. Yes. I have not been to Lake Powell in a long time, but mine is Lake Hartwell. Okay, yes. So its value and running doesn't, let's see. Sorry. So its value and running doesn't require you, or it doesn't fail without you. This is really, Larry's hit this nail on the head. Most buyers are looking for an investment, not buying a job for themselves. Yeah, not all buyers. There are definitely buyers who are owner operators, and they're tired of working in a job where they are just feeling like they're putting in tons of time and energy and making their owner rich. Now, they've not been a business owner yet, so they don't really get that. But for example, George could probably find an owner operator to buy his HVAC company. Someone like my son, actually. My son is 21. He knows he doesn't want to go to college. He knows he wants to go into the trades. This is why I'm interested in HVAC right now. We're talking about having him go through HVAC school, us buying an HVAC business together, and he would be the owner operator and create a great job for himself and be able to, raise a family and do all the things that he's not ready to do yet, but will be ready to do someday. So there are some, but most buyers want that business to be able to run on its own, right? And be more of that investor, and they want to be able to contribute to growth, but they don't want the business to be solely dependent on their time, energy, and effort. So we want systems and processes so that it can be owner independent. Then we're also going to look at sales and marketing. So let's do something fun right here. How many of you, most of your business comes through referrals and word of mouth? If that's you, go ahead and type in yes. Okay, yes. So we think, isn't that great? I don't have to spend a lot of money on marketing because we have such great word of mouth and referrals. That's actually a big risk because when you leave the business, are they still going to refer? Right? Are people still going to refer? We don't know. Are we still going to have word of mouth? Unknown. We don't know because that trust is invested in you. It's not necessarily invested in the company or everybody else. And so we have to diversify our sales and our marketing. So let's look at mitigating the risk and how you build the most value in your business. It's going to be the 4 C's. So this is your human capital, your customer capital, your structural capital, and your social capital. Your human capital, these are your leaders and your team. So one of the things that you can do that makes your business look really good is have a really strong leadership team. There's multiple people that are involved in running the business and they're cross-trained, and you have an ascension plan so that when one person retires, there's somebody who can step in and take their place. I'm currently in negotiations with a company that I'm excited about. I'm hoping to be able to make an offer soon. I cannot tell you guys names because we're under NDAs, but one of the things I'm most excited about is their human capital. Well, actually, I'm actually excited about all of these. They've done a really good job, and I'll tell you a little bit about each one. So with their human capital, every spot on their roster is filled with people who have been with them since the beginning for 7 years, and they have very low employee turnover, and they're cross-trained. I'm excited about that. They have a great team in place, and I wouldn't have to come in, like my intention is not to come in and fire people. My intention is I want the people to stay, and they're all very invested in the company. So the customer capital is the next thing that I'm excited about. They have really long running contracts, and they have monthly reoccurring revenue with their contracts, and they don't have what's called customer concentration. So if you go into a business and they're like, we have this really amazing account with this really amazing company called Walmart. They make up 45% of our business. That means if you lose Walmart, your company's toast, right? And who's to say that when we transition ownership that every customer is going to stay? So that's why when we get ready to transition, we want diversity in our customer base. We want a lot of contracts with a lot of reoccurring revenue. And so that way, we don't have to just rely on one person choosing to stay. Okay, Lana says, I've worked hard to create this. It feels so stable as an owner. So I can see how this would be a benefit to a buyer for sure. Yes, absolutely. And Lana just brought up the thing that I hope you guys all get. And so I don't know if she understands how brilliant what she just said is, but I'm going to point it out. That a highly sellable business is also a delight to run as a business owner. The better you get your business at being ready, your attractiveness score and your readiness score coincide with things like profitability and freedom for you as the business owner and growth. Like a well-structured business is a well-transferable business, and you're going to reap the benefits all around. Okay, so structural capital, these are your systems, your processes, your documentation, all of the things that you have in your business. It's like the scaffolding that keeps everything up and running. Your social capital is not your social media following. I know that sounds like that, but your social capital is actually things like your culture. Having everyone on your team aligned to a vision, to core values, you have a strong culture, and there's that magic sauce that people really want to work for you, and they're all invested in going the same direction. If your whole team is growth minded and they understand value and they're thinking differently and operating differently than the competition out there, that is a very sellable asset. So these are the 4 C's that we're going to be looking at. And I want you to just do like a little brief check-in. Let's just do a quick check-in. how do you feel like you're doing in these areas? Strong, weak, middle? I don't want you to actually, I would give yourself a rating on a scale of 1 to 6. 1 would be like, we are terrible. We don't have these things in place at all. 2 would be like, we thought about it, but there's no written plan. 3 would be, we have it in place, but like kind of, and we can't prove it. Because remember, you have to prove these things to the person buying your business. You can't just say it and then they're like, oh yeah, that's great. You have a great team. Like, you really have to be able to show it. 4 would be like, we're above average. 5 would be, we're really good. And 6 would be, we're best in class. We are like top of our game. Nobody does it better than we do. Okay, so give yourself a little quick score in here. All right, let's talk about acquisition. So when you go to sell a business, a lot of people buy businesses first. And you might think, well, that sounds counterintuitive. Why would we do this? There's a lot of reasons why you would do this. Right now, one of the business, so we are under contract to buy 5 crumble cookies. That's one of our businesses. That wasn't in our buy box originally, but I can say that one because that one's really close to closing. So that one's under contract. At this point, I would be shocked if that deal fell apart. Another business that we're in negotiation with 4 other companies right now. One of them is actually a smaller marketing agency. And the reason why is because it's actually cheaper for us to buy that agency than it is to hire the key players that we need within the agency. Because the agency that we're looking at buying already has the key players that we need, and they already have the income, the revenue, and the customers that pay those people's salaries. So reasons why you might buy: maybe you need some key team members and you can't get them through, it's going to cost you more to hire them than it is to actually buy their business. Maybe it's because you need better systems. This, by the way, this first one is the primary reason why I was able to sell AWC. It actually was because AWC came with revenue, reoccurring revenue, and because my yearly buyout over the next couple of years is the same as what I would require of my salary to hire. Like, it was cheaper to buy the company than it was to hire me. So that's a big part of how I got my 7-figure exit with AWC. Maybe you need better systems and the other company has really great processes. If you want to hire multiplier and you're trying to raise your EBITDA up. Or if you want to do a roll-up strategy. And a roll-up strategy is where you buy multiple companies of smaller businesses, you roll them up together, and then you can sell them now to a private equity company. So I've got a friend who did this with printers. He spent $300,000 of money that he borrowed from friends and family, and he bought 10 printing companies. And then he went and sold those 10 printing companies to a private equity firm for 10 million. So that's a really good strategy. I think we should all be looking at that and considering that. So with your multipliers, the higher your EBITDA and the higher your readiness and attractiveness, the higher your multiplier when you sell. And private equity companies are actively looking to acquire businesses, but they won't acquire businesses for less than 10 million in EBITDA usually. So they're not out there looking for these little micro opportunities. If you can create those, then you have an opportunity to be able to sell and then go and do it again if you want to, or just retire to Lake Powell. So does this make sense? Are you guys with me? If you have any questions here, go ahead and type them in. We good? All right. If any of you are like, this is kind of making sense, but it's new and I'm having it's needing to click in, it's totally normal. This really is a new language and nobody really teaches us this as small business owners. I wish that they did. I wish that this did. Okay, so oh, I'm sorry. They don't want to buy for less. Maybe I didn't say that right. So Adam, they don't want to buy for less than 10 million. So it doesn't make sense for them to spend less than 10 million. So you would need to get your EBITDA to a point where you could then multiply it and sell it for 10 million. So private equity, it doesn't have to be 30,000 is not the low end threshold, or sorry, 30 million is not the low end threshold. 10 million is a better low end threshold. So your EBITDA would, yeah, your EBITDA, if you had like 3 million in EBITDA, you could sell to private equity for 10 million. Got it. We got the numbers right. I love that Adam tracks the numbers. Okay, let's keep going here. So how easy is it to buy a business? Crazy. This is the easiest thing I've ever done. So right now let me just tell you the companies that we're in negotiation with right now. So we're really close to closing on the Crumble deals. That'll be closed in a couple of weeks. And the business broker who's facilitating the first deal just reached out and was like, I got 2 more. Do you want to buy those too? We are also in negotiation with a staffing and virtual assisting company. We're in negotiation with a marketing agency. We are in negotiation with a fractional COO services company, building systems and processes. And we are also in negotiation with a carpet cleaning restoration business. All of those have been brought about in the last 30 days. And the crazy part is we also have found the financing partners to help pay for that. So I'm not paying more than maybe like 250,000 is kind of what I'm planning and putting in up front. And I'm putting that in because I want to. I could do it without putting it in as well. The reason why I think people are, and it's crazy because every time I mention this, I always have somebody on social media that's like, lies, like you're not doing that. That's just made up. Or they're like, where's your Mercedes? I'm like, trust me, I don't want to put money into Mercedes right now. I want to go buy these baby boomer businesses because we have, in the next 10 years, 50 million baby boomers are going to retire. 12 million of those own businesses. That represents like about $25 billion in money that is tied up in this. Larry, you could just look it up. So where I've gotten this data is through I'm actually in the process of going through my certified exit planning training, and I've gotten it within my course and within the exit planning association. But I've cross-checked on Google, and you can find these numbers on Google too. It's pretty readily available. So only 20% of businesses that go to market end up selling. There are roughly 595,000 businesses that simply close each year. What that means is there's highly motivated sellers. You can purchase businesses with little to no money out of pocket. The reason behind this is, number one, with an SBA loan, you only need to have 10% down. If you already own a business and you're buying another one like it, you might even be able to qualify for 0% down. So for example, if George wanted to buy another HVAC company because he already owns one, he might be able to get that for 0% down. If Lana wanted to buy another preschool, she might be able to do that for 0% down. So it's not like real estate. When you're buying a real estate investment property, you have to put in 20% down. You also can find investors, and that's primarily what we're doing. So we're financing all of our deals through a mixture of SBA and investors. But right now, because the interest rates are higher, we're getting more favorable term with investors. And if you have a great deal, investors want in. Like, there are people who are just looking for the best place to put their money where they can get the best return. And if you have a really good deal that you find, there is always somebody who will want to go in on that deal. Okay. The other thing that I really love is that you can purchase businesses who are already able to support the payroll that you need. And also they're already ready to support the loan payment or whoever you're paying for financing, because this money is not free, right? So I want to give you an example. This is a really simple example. And I did not end up buying this business. I did call on it. I was super interested in it at the beginning, but they had already sold. And afterwards, I thought about it. I was like, I'm not really excited about that business. I was just excited about the numbers. But let me share the numbers with you. So I found in my local area two dry cleaners that were owned by the same person. They were selling both. They were retiring. So the businesses are doing about $499,000 in sales per year, and the EBITDA is so that like the actual cash that they're making was about $240,000 in sales per year. So about $20,000 per month. This was another business that I was like, I'm really interested in buying a business with my 21-year-old son, or buying a business for him that's more accurate. He's a super hardworking kid, and I just think it's a great path for him. And he's a really good leader. He's super responsible. I think he'll do amazing with it. But as I was looking at this business, I was like, okay, so if they were asking $399,000, so if I were to buy that with an SBA loan, what would my down payment be at most? Somebody go ahead and tell me, what would my down payment be? They're asking $399,000. Yeah, $40,000. So I put in $40,000, and then I have a loan payment, and I did calculate the loan payment based off of what current interest rates are. My loan payment was going to be about $4,000 a month. Okay, so I put in $40,000. The business is bringing in $20,000 in cash per month. I'm paying $4,000. That's $16,000 per month. And my thought was, I'll take 8. He'll take 8. $8,000 a month for a 21-year-old. That's a pretty good income. And over time, and I was going to take 8 because, first of all, I do believe you need to earn and grow into things. So I think that's an important lesson to learn. But secondly, I wanted to be able to then start marketing the business, because as you'll see with many of these baby boomer businesses, they've done a bad job with marketing. They've built it off of location, word of mouth, reputation, and that is exactly the case with this. So I wanted to be able to actually start marketing and start growing that business and creating something where over time he could then buy me out and own the business on his own, free and clear. So I like that math. I like that math all day long, every day. And those numbers were after they had already paid their team members that work there. They have 3 team members that run the shifts. And currently the business owner is kind of part-time. So he could even have maybe taken the place of one of those team members and been there full-time, and just maybe had 2 helpers. Maybe you got 2 people in during their open hours. I don't know what that looks like. But that was a set of numbers that I really liked. The business was already supporting the payroll. It was already paying for its rent. It was already paying for its equipment. And it was making enough money that it could pay for the loan, and it could also pay what my son would need to get out of it for it to be worth his while, and what I would need to get out of it for it to be worth my while. There are deals like this everywhere. So whenever people are like, oh, I say like, it's so easy to buy businesses. This is one of the easiest things I've ever done. People are like, that's ridiculous. That's crazy. You're making it up. I'm not making it up, you guys. Now, does that mean that it's easy to own those businesses and to run them and to make them good? No, because you're dealing with people and you're dealing with customers. And of course, you're going to have to do the work to make that company great. I'm not saying all that's easy, but I will say this, it's easier than doing it from startup. How many of you on this call did a startup? Like, you pour your blood, sweat, and tears into that thing, and you're like pumping out money in the beginning, just trying to get up to that point where you're making enough. And there are times when you go without paying yourself because you're making sure that you're covering payroll for everyone else. You don't buy those businesses. You buy the businesses where the numbers all line up, and also where you feel like you have value to add into the business, right? So much work to do a startup. I 100% agree with you, Lana. So much work. There is a faster, simpler, easier path. All right. I hope I've sold you guys just a little bit on the path of acquisition. If you're sold, just type in, I get it. Because for me, this was a game changer, and I will never again do a startup. From here on out, I am looking to buy businesses, because the other thing is, I want these baby boomers to be able to retire. They have worked hard. They have built so much for our economy. They should get to pull that money out of their business. Okay, so let's look at structural capital. What does it mean to have structural capital? Well, it means that you've got an org chart with depth, that if one person leaves, you're not going to fall apart. It means that you have systems and you have processes. So this means like your CRM and all of the software that you're using and things functioning the way that they should be, and everybody knows how to use them. This is having a provable value enhancer. So something that you do better than your competition that is documented and you can show it to somebody else, not just something that you say. You say, we're better at this than other people. Okay, but how do you prove it? How do you show that? And documentation. Are all of your SOPs documented? Are all of your job descriptions documented? Like, could you change people in and out without disruption to the business, or would a person being changed out create disruption to the bottom line? We want to make that feel like so solid. Okay, let's look at marketing and sales. Also, I want to, before we switch to marketing sales, I just want to do a check-in and hear from you guys. How are you feeling about this? Do you have any questions? Is this making sense? I want to make sure you guys really walk away feeling like I understand what needs to happen. So if you have any questions, go ahead and type those in. All right. Okay. So far, so good. Great. Okay, so with marketing, if you are the marketing, what happens when you step back? It's not looking great. So with your marketing, we really want to look at your digital footprint. We want to look at your social media, your website, your email list, your following. If you are the superstar of your social media, that can also be kind of a problem. So we want to start transitioning that. If like you're the voice on everything, let's start transitioning that. Let's bring more people in. Let's focus on more of your team. We want to look at social proof. Do you have good Google and Facebook reviews? Do you have video testimonials? Are you being tagged by clients? We want to look at your lead flow and lead quality. How many leads are you bringing in per month? And are they the right leads? And if you were to leave, would that lead flow continue, or is that lead flow dependent on you? So that's a couple things to consider with your marketing. Here's some of the biggest mistakes people make when it comes to marketing, just in general. Not knowing how many leads you need. Your marketing playbooks are not connected. So it's like I'm doing social media, but that's not actually leading over to my email marketing. So I'm doing email marketing and I'm doing social media and I'm running ads, but they're not all connected and they're not all working together. Another really common mistake is wrong audience, wrong offer, or like some wrong combination. Like it's just, they're not all aligned. And the last one, I see this quite often actually, is you don't know what's working and what isn't. So it's like, well, here's all the things we do for marketing. Here's how much we spend for marketing. Well, which one is working? We have no idea. I've literally gone into businesses just to sit down with them and go through reports and tell them this is working, this is not, because they have no idea. And it's kind of hard to track actually. So if you didn't set it up to be trackable from the beginning. So here's some mistakes we want to make sure that we are not making. Now let's look at sales. So if you're the best closer on your team, give yourself a round of applause and then realize that that's actually going to hurt your business when it goes to sell. You don't want to be the best closer on your team. You don't want to be the only closer on your team for sure. So when we are navigating the path to conversion, we want to understand the sales funnel, the stages, from awareness to interest to decision-making to action, to guide your prospects through the sales process and make this a process, not a person. Because if you have a really good process, you can plug other people in and other people can successfully sell for you. And it doesn't have to be you on there. This has been a challenge for me in my business because I've learned to be, I didn't start out this way, but I've learned to really love the process of guiding a customer through the decision-making process. And I'm a really good closer. And so finding other people who can close as well as me, I always have to look at that and say, was this successful because I closed? Or was this successful because the process was good? And I have to prove it with somebody else every single time. Otherwise, we have really skewed data. It's like we think everything we do works. And then I take myself out of it and I'm like, oh, no, just kidding. That was just me. I was the reason that was working. Hence our 2018 meltdown. Okay, if this is helpful and you want to learn more and go deeper into this, then I'm going to invite you guys to come to our 7-Figure Exit Bootcamp. In this, we're spending 3 days together. So we've gone through a lot in 55 minutes. By the way, I had you block off till 90 minutes because I wasn't exactly sure how many questions you'd have and how long it was going to take me to go through this. This is the first time I've done this training. So you were my guinea pigs, and it will be done in about 10 minutes, 10, 15 minutes, but thank you for being my guinea pigs. So anyway, I'm just telling you that because I was looking at the clock. Refocus. I got distracted. Okay. So with this, in 55 minutes, we've given you kind of like a bird's eye view, but you don't actually really know your numbers yet. And you haven't assessed your business yet. And so in the 7-figure exit bootcamp, that's what we're going to go deeper into. So we're going to really go through and assess your business and your readiness to sell and come up with your plan for what needs to be improved for you to be able to sell for what you want to sell for, or at least drastically increase the value of your business. That's what this bootcamp is all about, is increasing value in your business. So some of the things that we're going to be doing, we're going to be actually looking at your 3 marketing playbooks that can increase your revenue by 100K per month. We're going to be looking more deeply about how to use acquisition as a growth strategy and how you can buy businesses with little to no personal money. We're going to teach you how to find the deals. We're going to teach you about negotiating. We're going to teach you about how to actually look at the numbers and see what might be a good fit for you. And we're going to teach you about how to find the funding. We are going to cover the key systems and processes that you need to build before anyone will consider buying your business, and really dial in your customer journey, your sales process, your systems, your scripts, so that your team is really structured to be able to acquire clients for less money than your customers are spending or your competitors are spending. A big part of this, though, is not just what you need to fix in your business, but it's understanding what your exit options are, what your values are, what you should be doing now in order to set yourself up with your timeline. I don't know that everyone wants to sell their business in the next 18 months. I have no idea. But I do know that at some point, every single one of you is going to want to be able to pull that money out of this asset that you have spent your blood, your sweat, your tears, your brain power, like you've poured your heart and soul into this business, and someday you are going to want to harvest that wealth. And I want you to be able to have the key to unlock it. So that's what we are doing at the 7-figure boot camp. So I would love to invite you guys to join us. It's 3 full days of live training. We are workshopping. So it's not going to be a sit and listen. It's going to be attend, participate. Our goal is to have 15 people there. I do have a discount code for you guys for being on as my guinea pigs. Do any of you guys like really great deals? If you like really great deals, just type in, I love a deal, Amy. Because otherwise I'm happy to let you guys play $24.97 to come. Do you guys like deals? Yes, smart people do, 100%. So if you guys would like to attend, and I'm going to be fully transparent with this, there are 2 reasons why I'm going to give a deal. One is because we are testing our marketing on this, and we're testing price points that work. So while I 100% know that this event is worth $24.97, I've taught it before, it's amazing. You're going to walk away with so much value. I don't know if my marketing, the marketing cost to get to sell it for $24.97 is going to be worth it. And so we're testing it right now at $47. So I'm going to drop in a link. I'm going to give it to you for $47. The other reason, and I want to be super transparent with this. I don't want there to be any surprises down the road. One of the biggest reasons why I'm doing this event is because I am proactively looking to buy businesses. And for me, the way that I've always generated value and the way that I've always added to my community and to my network is through showing up and sharing and giving value and serving. So I know that as I show up and serve this community of business owners, which I've been serving for years, I love this community. But as I show up and serve, I meet the people who are like, hey, Amy, I actually have been wanting to exit. Would you be interested in taking a look at my business? And so for me, if I don't make any money teaching people about exit planning, but I find the businesses that I want to buy, I'm super happy. That is a win for me. Now, you coming does not mean that you are obligated. There's no contract to say, now you have to sell me your business. Not at all. But while you're there, I want to be able to understand what you're looking for. And I also, on the flip side, am teaching buyers how to buy businesses. So it might be that I have someone in my network who would be interested. So I am going to drop the link in and I'm going to answer any questions that you have. Lana, this is going to be an online event. And I'm going to give you the dates and I'm going to give you the link and hang tight. I had the link up. Here it is. It's like, I know I have it. Okay, here's the link to register. And I will go ahead and share with you the discount code. The discount code is Amy47. So if you go ahead into that page and you type in Amy47, it's going to take your price down to $47. And again, we're testing this price for the next couple of weeks. So if we can sell it for $24.97 and that is easy, that's what the price will be. So if you do want to come to this next event, grab that ticket because I don't know what the test is going to say. Maybe it says that this is just a great $47 product. I don't know if that's going to be the case though. So I would encourage you guys to go register. We are going to meet from 10 till 5 each day. The link, you guys don't see the link? Pop it back in. Do you see it that time? Did it come through? No? How are you guys not seeing it? Oh, because I'm giving it to host and panelist. That's a fun little detail that kind of matters. Now do you see the link? Tell me yes. Yes, okay, we got there. So there's the link, and then I'll type in the code Amy47, no space. So the dates on this is going to be in March, and it is March. Oh, you guys, I'm so sorry. We didn't get the dates updated. It says February dates that are not actually correct. This is going to be March 20th, 21st, and 22nd. March 20th, 21st, and 22nd. So those are the dates. I would invite you guys to come. I think it is going to be 3 days very well spent in helping you to be able to capture massive amounts of value in your business. I know you have worked really hard to get where you are, and I applaud you for that. Like, it's so much time, energy, and effort to get to that point. So your job now is to figure out, how do I make sure that I'm not just making money today, but that I'm actually building an asset that I can withdraw money from in the future. And if you're excited about that, I would absolutely love to have you there. Do you guys have any other questions for me? Any other questions? All right. Then, okay. So, Lana, yeah, absolutely connect with me offline. Lana, I am going to be doing another one in Salt Lake City in April. Price is going to be different because it's in person. But I would absolutely love to have you there. So connect with me offline and I can give you dates for that. Adam, are you also in Salt Lake City area? Oh, okay. So let me give you the dates in April. Now, I will tell you though, the link is not going to actually work for April. So you're going to have to, you know what, you guys, I'm going to type in my email and I just will have you guys email me. Okay, so Amy at Amy Walker, well, let's do theexitschool.com. Okay, Amy at theexitschool.com. Email me. Let's talk. I would be happy to connect. And you guys, thank you so much for being on. It was just a joy to be able to share some of these things that I have been learning and I'm super passionate about. And I hope that this is unlocking some ideas in your mind and helping you see potential for what you can actually do with this thing called your business. All right, that's it. Thank you guys. Appreciate it. Have a great rest of your day.